Curious about the national residential real estate market? We'll discuss the 6 key national real estate market indicators and how each impacts buyers or sellers. Afterwards, we'll provide specific information for those who are considering buying or selling a home. Hello Central Kentucky. This is the National Real Estate Market Watch for October 2023, brought to you by Century 21 Simpson Associates. Let's dive into the indicators and trends based on the latest national market data from August. Months supply of inventory. Months supply of inventory measures how long the current inventory of properties would last at the current rate of sales if no new properties came on the market. 6 months of inventory represents a balanced market, favoring neither buyer nor seller. After 4 consecutive months of increasing months supply of inventory, in August, it remained steady at 3.3 months with only 1.1 million unsold existing homes on the market. Buyers still have a little less competition compared to the recent past. However, competition remains strong. At 3.3 months supply of inventory, the market continues to strongly favor sellers. For context, over the past decade, the average month's supply of inventory was 3.9 months. Current inventory. Current inventory reflects the number of active listings as of the 15th of the month. The number of actives is not static and depends on when the report is run. A trend upward or downward from month to month can be established by using the same day of every month. In August, there were 1,100,000 homes on the market. The actual number of unsold homes on the market fell 0.9% this month and remains near its lowest level since 1999. Inventory is one of the 2 major factors currently impacting the housing market. There are still half as many homes for sales as there were pre-COVID. Only buyers who are not impacted by rising mortgage rates are likely to appreciate having slightly more options to choose from. With the current low inventory, this indicator favors sellers. Sellers can feel more confident and may be more likely to put their home on the market despite rising mortgage rates. Existing home sales volume. The existing home sales volume is the total number of all the properties whose sales contracts were completed or closed during the month. Home sales were down 0.7% compared to the previous month. Although this is a contrast to the normal seasonal trend of rising sales in the summer months followed by 2 months of declines, this decline is moderate. Home sales have been stable for several months, neither rising nor falling in any meaningful way, said National Association of Realtors chief economist Lawrence Yun. Mortgage rate changes will have a big impact over the short run, while job gains will have a steady, positive impact over the long run. Homes that sold in August typically went under contract in July. In July, rates hovered in the upper 6% range before jumping notably above 7% in August. If the trend of buyer pausing continues when rates spike, those declines should show up again in next month's data. Buyer affordability is again impacted by higher interest rates. However, those who are willing or need to purchase can take advantage of more available inventory. Sellers who are ready to list their homes should be encouraged that despite sales being down, buyer demand continues to outpace listing supply. While there are consequences for both buyers and sellers, the existing home sales indicator is simply a gauge of market activity during this period and favors neither buyers nor sellers. Median sales price. The median is the price where half of the homes sold in any given area that month were cheaper, and half were more expensive. The median sales price rose 0.4% to $407,100. The double hit of high prices and mortgage rates is hard for many buyers and would-be sellers that need to purchase again. There is still not enough inventory to meet demand, which means that prices will likely continue to rise. Home prices continue to march higher despite lower home sales, said National Association of Realtors chief economist Lawrence Yun. Supply needs to essentially double to moderate home price gains. Despite higher mortgage rates, buyers can purchase with confidence because low inventory means prices are not likely to drop. Sellers still have an opportunity to capitalize on historically high prices and strong buyer demand. Sales prices are directly related to the continued levels of low inventory, so this indicator favors sellers. Current mortgage rates. Interest rates vary by area, lender, and type of financing. For reference, we look at the national rate for a 30-year fixed-rate mortgage. As of October 5, 2023, interest rates stood at 7.49%. While the current interest rates feel high to consumers compared to the 2.65% rates they were able to get not even 3 years ago, they're just slightly above the all-time average of 7.39%. As economic uncertainty levels off, the hope is that this will help recalibrate interest rates. Typically, mortgage rates move in relation to treasuries. Right now, the spread, or difference, between mortgage rates and treasuries is higher than normal. In 2024, mortgage interest rates may fall if rate hikes stop and inflation continues to cool. It is important to note that while mortgage interest rates are a huge driver of the home buying market, they do not matter for the 27% of the market who are paying all cash, said Dr. Jessica Lautz, the Deputy Chief Economist and Vice President of Research at the National Association of Realtors. Interest rates are a big piece of the affordability equation for buyers. Each 1% increase in rates is roughly equivalent to paying a 10% higher price. Thanks to continued strong prices and multiple offers, the rising mortgage rates won't necessarily impact the sale of their home. Thus, this indicator favors sellers. Days on market. The days on market is the average number of days that sold listings were on the market. Those days are calculated from the day a property is listed until it goes under contract. If there were any days the property was off the market, then those days are subtracted. Days on market are still at a brisk 20 days. The average number of offers per listing was up to 3.2 from 3.0 in July. This month, the number of offers above asking price eased to 31% from 35% last month and is far below the peak of 51% in the summer of 2022. While more buyers are making offers on properties, not as many are over asking. Buyers are more likely to pay closer to list price than last summer. There are still many buyers in the market who act fast, compete, and are willing to pay above list price, with more than a third of buyers paying over the list price, so this indicator favors sellers. Now that we've covered the latest national housing market indicators, what do they mean for buyers and sellers? Let's consider what buyers and sellers need to know. Buyers. The supply of available inventory remains steady, meaning that buyers still have a little less competition compared to previous months. Interest rates are also up. When interest rates jump, decisive buyers have a narrow window to capitalize on less competition, while others may pause to consider. Prices are up slightly. In fact, with low inventory and strong demand, it's likely they'll go higher. You have a unique opportunity to find a house and lock in today's prices. You can always refinance as rates settle back down. If you find the right house, wouldn't it be great to make the move while all these factors are in your favor? Sellers. Timing the market is nearly impossible. The best we can do is read and react to the data available. Despite high interest rates, demand from buyers continues. With low inventory levels, well-positioned listings with a great mix of price and condition sell quickly. Days on market is just 20 days, which means homes are selling fast. What's more, listings are getting 3.2 offers on average and 31% are still getting offers over list price. Have your realtor run the numbers based on the market and see if that achieves your financial goals. It's best to act now if you're ready to sell. If you are interested in comparing the indicators in this national market update with those in central Kentucky counties, check out our local real estate market updates for Frankfort, Franklin County, Georgetown, Scott County, Lawrenceburg, Anderson County, Lexington, Fayette County, Nicholasville, Jessamine County, and Versailles, Woodford County. Have questions? Call our Frankfort or Lexington offices or reach out to one of our real estate agents. Please join us again next month. Thanks for watching.